Welcome to Conversations, Season 2 of the MTA podcast series, a weekly audiocast featuring interviews with leading investment strategists, geopolitical experts, and other key thought leaders, brought to you by the Market Technicians Association.
This is Tim Braun, co-chair of the Minnesota MTA, and with me I have Kevin Hockert and Wayne Whaley. Wayne Whaley is a CTA, a commodities trading advisor, with a company called Witter and Lester. Wayne has a master's degree in operations research from Georgia Institute of Technology. During these years, he concentrated on mathematical modeling of probabilistic models. That's a mouthful. After college, he worked at Teledyne Brown Engineering and Sparta, where he used his mathematical skills and background to develop software simulations, simulating the outcome of nuclear exchanges between the United States and the Soviet Union. His interests there eventually led him to Witter and Lester, where he became a partner in 1999. He now trades the company's assets. His duties include research activities supporting his trading activities. Mr. Whaley's forte is the development of pattern recognition techniques, along with the ability to back-test multitudes of combinations of candidate market strategies. And welcome, Wayne.
Thank you for that kind introduction. Just a 2 or 3 minute summary of what we're looking for. I do a CAT scan of the take measurements every day, and most of my studies support the thesis that we put a good bottom in on August the 8th. We had a day on August the 8th where we had 0 advancing issues from the S&P 500. And if you look at those kind of capitulation-like days, especially after a 1 month sell-off, the odds favor that the bottom was put in place on August the 8th. In those kind of sell-offs, a couple of things should happen. You should then be promised a reflex rally, which as of today, August the 16th, is my estimate that we are 75% into that reflex rally. That rally should last 2 to 4 weeks and could take you back up to a couple of logical levels, either a 50% retracement of the sell-off, which would take you back to 1236. There were old, strong support levels at 1250, which under the theory that once support is broken, it then becomes resistance. Ideally, perfect storm, you would take it back to 1250 and everybody could get short, but most likely that's not going to happen because it's too logical and too many people are looking for it. Optimistically, I think in the best case, you can make it all the way back to the 200-day moving average, 1285. At some point, after 2 to 4 weeks after August 8th, after you get that reflex rally, you should turn back over and have a week or two where you go back down and retest the August 8th low of 1101.50. If you have a successful retest there, that should set you up for a very positive end of the year. And with successful being the key word there, you need to not only go below the 1101.5 level, but then you need to be able to come back up and have a post-positive close above 1101.5. This could all occur. Retest could occur during September-October period, which are 2 of the weaker seasonal months of the year, and set you up for a very good rally into the end of the year. As my studies have indicated, when you have a sell-off like we did into August the 8th, that kind of breadth over a month and a day, 12 previous occasions that we have identified, you were higher in all 12 occasions 12 months later, but in 11 of those 12 occasions, you did go back and make lower lows at some point in the next 1 to 3 months.
So
that's a summary.
Okay.
Yes.
Wayne, I appreciate that. Kevin Hockert here. I love your work, particularly your breadth studies. And maybe in the last minute or 2 here that we have in our interview, you wouldn't mind sharing some of your tremendous and very intensive work that you've done with advanced decline data and volume data. It sounds to me like that's adding to your case for calling for some sort of a bottom here. So if you wouldn't mind just spending a minute on that, that would be very much appreciated.
Wayne, I would add to that, this is Tim, what I would add to that is that your work on the planes, trains, and automobile paper that you wrote for the 2010 Charles Dow Award, maybe you can give us an idea of what the basis of that work was and kind of the crux of how that works in your research.
Going in reverse order, my work, one of the most highly reliable indicators that we've had over the last 50 years has been the very treasured traditional 10-day thrust model that was proselytized by Marty Swag 30 or 40 years ago, and someone probably did it before him. But whenever you have 10 days of breath where it massively declines over a 2-to-1 margin over a 10-day period, those have like a 95% probability of being successful over the next 6 to 12 months, going all the way back to 1950. And what happened to us was those signals disappeared in the 1990s. We went 15 years without getting one, and everyone stopped following them. Then all of a sudden in 2009, they started to reappear. So I went back and revisited those, and I looked at the track record. I said, gosh, these are really good signals. You know, you have to have these in your models, but how do you rely on a signal that goes AWOL for decades at a time? So my thought was to go back and start all over. Don't necessarily focus on 10 days. I looked at all time intervals from 1 to 21 days for these thrust signals. Then my thought was maybe you can get help from other areas, such as similar thrust signals from volume, or similar from price, or new highs and new lows for the traders index. Looking for these very strong bursts of energy. And then the thought was, well, if we get these forward thrusts, what do reverse thrusts mean? So I went for forward thrust, and I looked at reverse thrust, and the idea behind my paper, Planes, Trains, and Automobiles, is that there are a lot of ways to travel from point A to point B, not just breadth. You can get there by riding different vehicles, such as volume and price. And all that work was wrote up into my Planes, Trains, and Automobiles paper that's posted on the internet or at your MTA site or on my website that people can visit. That was my initial jump into that kind of work, and I've done several iterations on it. I'm actually working on what I call CTA 8 now, which is an 8th version of Planes, Trains, and Automobiles. And I keep thinking of different ways to improve my work, and I run those studies every day. I have 10,000 lines of computer code that I do maintenance on every day and run for signals on these various things. And I document those at the end of the day and send them out as commentary to anyone who's interested that can contact me at Wayne@WitterLester.com to get on the mailing list when these signals occur. And I look at a lot of different things up in the tape. I do monetary work, I do seasonal work, short-term tape signals, longer-term tape signals. So
that's fantastic, Wayne. So it's Witter, W-I-T-T-E-R, and is it ampersand or is it actually spelled out? And
WitterLester.com, WITTERLESTER. It's Wayne, W-A-Y-N-E, @ WitterLester.com, WitterLester, one word, WITTERLESTER.com.
Super, that's fantastic. Wayne, I would like to thank you. Kevin, my counterpart, would like to thank you for joining us and putting forth the podcast. I would just wish everybody an uptrend, unless you're short, and wish everybody a good evening. Thank you, Wayne.
Thanks again, Wayne.
Good day. Anytime, guys. Thank you.
Yep, take care.